Not a big surprise on some levels, Rachel, that there is softer demand out of China for luxury goods, but the numbers within the mix for LVMH causing quite a lot of angst for investors.
Right, definitely so. I mean, we've seen bad numbers for luxury brands in China for most of the year, but this set of results was such a shock to the market, and I think will continue to play out as Europe wakes up because, things really seem worse than expected. For example, the drop again in China revenue, that was expected. That happened last quarter as well, but there was a drop lower than estimates in the really important fashion and leather sector for LVMH. That hasn't shown such bad results since the pandemic. So since the world went into lockdown in 2020. This is as bad as then. And again, last quarter we saw some bright spots. So for example, Japan was doing pretty well for LVMH last quarter because we saw the Chinese tourists going to Japan to buy their bags instead of in China. But this quarter, we're not even seeing Japan hold up. We see Japan going down as well for LVMH. So essentially, there are no green shoots, no bright spots for them anywhere at all in the China story. And so, people are really panicking now.
Well, so that leads to the obvious question as to what next then for luxury brands in China. Is this as bad as it gets, or is there more pain on the horizon, do we think?
So that's really the question that people want an answer to. So now all eyes are going to turn to Hermès next week because Hermès really is that one luxury brand that's still done really well in China throughout because they are, right at the top end, really the billionaires, people who are not really suffering. They don't discount. They're very exclusive. So if Hermès is starting to report weakness as well, that means weakness at that very top end of the Chinese consumer. Then, there's really going to be panic. But essentially, now in all the European luxury houses, there is starting to be the question of whether all of that massive investment they made in China, the bet on the Chinese consumer, whether that is not a short-term problem right now, but really that bet was the wrong bet, that in the long term, the Chinese consumer is not actually going to be as big a part of the luxury story as previously thought.
Rachel, before we let you go, does that suggest that some of these companies might be looking at restructuring their operations in China, at price cuts? Do we have clarity on how these executives are thinking about how they adjust their businesses? And is there an expectation that maybe in the months ahead, the stimulus and the support coming through from the Chinese government could turn things around for the Chinese consumer?
I think for the stimulus anyway, disappointment has set in really quickly. We're not really seeing any efforts to boost the consumer. We're not really seeing Chinese consumer confidence rise on the stimulus. And for the fashion labels, for the luxury houses anyway, I think some of that deep conversation is already happening about pulling back on the investments that they've done in China. For example, we just reported that Tiffany's closing its Shanghai flagship, halving the size of its Shanghai flagship store. A lot of big plans, in the past decade for really going big in China. A lot of that is now being pulled back. And probably those long-term strategies will have to be withdrawn. We know that they're going to be looking at other regions, for example, the Middle East, to prop up some of the growth that they're no longer expecting from China. So this is really a big turning point for the luxury industry.